So you have a growing unison of countries that are joining together that in and of themselves maybe can't project that strength, maybe can't stand up to the West, but together as a group, their militaries are stronger, their GDPs are bigger. I think it's a growing chorus of countries standing up to that hypocrisy, standing up to the West in a way that they've never been able to do in and of them. Well, you have all of these countries joining the BRICS that you put them all together along with the Shanghai Cooperation Organization and the Belt Road, you're talking north of 80% of human population. And all it would take, now you have to remember, we're coming from a period of time where asset prices were blown sky high over the last several years, with more money being created in the last 3 than in the history of the country preceding it. A lot of that money found its way into assets, and you have the misallocation and the distortions that are created by this. All it would take would be for Saudi Arabia to stand up on the stage, as they just told the folks at the Davos conference that we're now going to consider taking other currencies for oil. We've already been told that the BRICS currency would be pegged to gold or to commodities, and the assumption being gold being one of the commodities. I think all it would take would be Saudi Arabia to say to the West, thanks for the memories, it's been great, we appreciate it, but we're going to open up oil purchases in other currencies, not just dollars, maybe euros and ruble and rupee and gold. And all of a sudden, bang, all of the countries that have had to hold dollars for the last 50 years no longer really have any interest in holding them. And if they all start to dump dollars, and I think it would happen quickly, where they would all dump dollars, you have a tsunami of inflation hitting the shores of the West that would immediately create a spike in interest rates to compensate for the loss of purchasing power. This is how we see a great reset, as interest rates spike in relation to a crashing dollar, which then is inversely correlated to asset prices that have gone stratospheric over the last few years, and I would argue irrationally. And as interest rates spike and this inverse correlation hits the shores, stocks, bonds, and real estate, along with the crashing dollar, all collapse at the very same time. And when I ask, do you think it was intended, I guess I'm kind of tongue-in-cheek, but if you think about it, now you have a villain. Instead of blaming the Fed for creating these distortions and letting this happen, you have the Fed there saying they're going to raise rates, but they've done a woeful job at raising them high enough to tackle inflation. Yeah, the dollar will always have a relevance to it, and maybe it's not in its current state. But the thing that I think is really important to understand is that these agreements that are being made with the BRICS represent such a massive part of GDP and of population. At what point does the West decide to or attempt to trade with this group? Are they even going to be welcomed into it? I don't know. It just seems they're being isolated. They will fight, and they won't just give it up. But, a lot of people will make the analogy to the euro, that all these countries came together and it didn't work. And I think there's something to be said for that. But when you look at all of these countries coming together in a similar rallying cry, for whatever that rallying cry is against the West, it is the backing of the new system by commodities, and perhaps all of it denoted on a distributed ledger. The digital yuan, which has been running for the last 4 years, backing the Belt Road to the tune of over 20 billion in successful transactions, would be, I believe, the rails to a new BRICS currency that would show the immutability of what every country pegged or pledged to the new system. That gives it the glue to make it work, where everyone has the same equal footing, equal say at the table. This, to me, is what would make the system work. As Zoltan Pozsar calls it, a new system backed by commodities, Bretton Woods 3, rather than a system backed by debt instruments and promises. I don't know exactly what that looks like. I'm sure they'll resort to any and all, with what's happening. We're funding the Ukraine to a total of almost $100 billion. We're selling them Stinger missiles and drones, providing, tanks and intelligence. I mean, you could argue in a court of law, we would be an accomplice to a crime. You could argue we are moving in that direction, and maybe that is what they're going to resort to. But I don't know. And I think the bottom line is simply this: we are indebted to a level that will never pay it back, and interest rates are rising. So at what point do people want to start receiving something that is tangible for the commodities that they're trading or for the business that they're doing with a country that is paying them in inflated dollars? And certainly the Treasury market is rife with risk at this point in a rising interest rate market. I think the bloom is off the rose for the West. So what does it entail? How do they fight back? I'm sure they will, and maybe it is war. I don't know, but your point is valid. I think the Saudis are joining the BRICS nations so that they have protection from countries that have the ability to back them and stand up to the West. I think, certainly the Saudis would be the linchpin of it all. But if they're joining a group that has the ability to stand behind them and protect them as part of a unified nation or a unified group, it would seem that they're picking a fight with everybody. It may slow things down, it may derail it, it may change the way that it plays out. But look, ever since the sanctions, you're still seeing north of 80% of the world trading with Russia. It hasn't bothered the majority of the world. So, and I guess what does lose mean? I don't know. How bad does this get? And who gets dragged into it? There are a lot of what ifs and suppositions there. I don't know, and these are all valid points. And again, this is a chain of events that I've seen accumulating over time, and I guess there's fluidity to it. There's no question about it, and it certainly, it certainly changes, making this something that's cut and dry. There will be an outcome that I guess we'll have to see, but I don't think it changes the global de-dollarization, the global drive away from the dollars. And if Russia is hampered in any way by their ability to hold up their end of the bargain with the BRICS, so be it. I still don't think it changes the ultimate move away from the U.S. I think that had a lot to do with it. And look, a lot of these countries a decade ago were in no position to do this. When in 1974, when Kissinger signed this contract, the Middle East was a poor area. They weren't enriched and they weren't developed the way that they are right now. And you could say the same thing about China. The progression that they've made as an industrialized nation is extraordinary. So I guess it's just like you said, to your point, it's the time. You go back to the 1400s, almost every currency had between an 80 and 100-year lifespan. We're already, we're on the outskirts of that, living on borrowed time, you could argue, from an historical perspective. So maybe we've just run the course of our currency. I suppose those countries that are part of the Western Alliance, Canada, Australia, the United Kingdom, Japan, and I don't know if they really do want it to continue. I don't know who is on Team Dollar. I guess I haven't thought that far out, to be quite honestly. I haven't thought about it that way. I guess all I'm looking at is mathematics. And when you see such a massive shift of human population coalescing against the dollar, and it's very obvious to see when you see shifts away from accepting the dollar for oil by countries already and admissions by Saudi Arabia to look to other currencies. I think you have to take a real hard look at what happens if all of a sudden the world doesn't need to own dollars to buy oil. Not just China, Saudi Arabia, all of these countries. Why would anyone buy our treasuries earning 3% with inflation double that by metrics that arguably are wrong? I don't know if you've ever had John Williams with Shadow Stats on your show, but he'll show you numbers that the way the inflation was calculated prior to 1980 when they changed the numbers, and he would say inflation's at 15% right now. But even using 7% inflation with a 3.5% yield on the 10-year treasury, you're guaranteed a real return of negative 3.5% compounding over 10 years. Why would anyone want to do that? And so you're right, it's not just the dollar market, it is the treasury market, and we are incentivizing by the underperformance and the mismanagement of the dollar and what's happened to the yields on the treasuries for other people or for these countries to find other ways.